Hi folks, this is Jamie Upson from Stonehearth Capital Management with an educational economic update for March 2018. In this month's video, I'll discuss some of the major headlines that influence markets in February. I will also provide insight into what these developments could mean for you as an investor. Please stay tuned at the end of this video for a required disclosure statement. Domestic markets started 2018 off with their best monthly performance since at least 2016, only to stumble in February. Both the S&P 500 and Dow had their first monthly losses in 10 months, breaking their longest winning streaks since 1959. Overall, the S&P 500 lost 3.9%, the Dow dropped 4.3%, and the Nasdaq gave back 1.9%. These losses came as volatility picked up throughout the month. In early February, we experienced back-to-back sell-offs, followed by large jumps. During 1 week, the Dow lost 1,000 points and gained back 300 twice. But this volatility wasn't the result of negative economic data or geopolitical problems. Instead, a combination of emotional investing and computer-generated trades may be to blame. Essentially, investors became concerned about inflation when the labor report indicated that wage growth was picking up. By the end of February, comments from the new Federal Reserve Chair, Jerome Powell, led some investors to believe interest rates may in fact rise faster than anticipated. In testimony to the House Financial Services Committee, Powell spoke of growing global strength and stimulative fiscal policy. He also said that inflation may be moving closer to the Fed's target rate. This positive view of the economy could potentially result in 4 interest rate increases in 2018. On February 27th, stocks dropped significantly in response to Powell's testimony. The volatility continued the next day as stocks whipped back and forth before ultimately ending down. If February's volatility feels unnerving, that may be due to the market's unusual calm in 2017. Since 1980, the average annual S&P 500 correction has been approximately 14%. Last year, however, stocks only fluctuated 3%. When considering last month's fluctuations, remember that positive economic perspectives were behind much of the movement. Despite the volatility, consumer confidence easily beat expectations and showed that people feel particularly good about the labor market. Moving into March, we will pay close attention to inflation, interest rates, and investor behavior. As developments arise, we will keep you informed. Once again, this is Jamie Upson with Stonehearth Capital Management signing off for the month of March 2018. Please remember that nothing we talk about here is a recommendation. If you would like to discuss your personal financial situation, please give us a call at 978-624-3000. We'd be happy to talk to you. Thank you.